hope everybody is having a good weekend so far. Today, we're going to be talking about how I called the top of the market this week, which is going to have a few elements to it. We're going to talk about the quarterly theory, standard deviations, and we're going to talk about SMT. So, if you watched a lot of my other videos this week, I had this black line on here, and I said, I think it was either Friday or Monday, I had it on there, and I showed you guys, I said, this is where I'm looking to see a reversal of price action. So, where did I get that? Where did I get that line from? I already talked about this a little bit, but, so we're just going to do this. Take our fib. We're going to take the high from the high of this run to the low that took out all this liquidity and filled this imbalance here. So we're going to take that, and we're basically just going to add another one on top of it, which is one standard deviation away. This is an additional standard deviation from this range. So that's exactly where I got that line. So we have that, and we also have the day, we're right around day 40 of the interbank price delivery algorithm range. So once you hit 20 or 40 or 60, depending on obviously the price structure and overall narrative, you can be looking for prices to turn around and seek out liquidity in the past 40 days, 20 days, 60 days. So that's exactly what we have here. Hit day 40, price turns around. So where are we reaching for? There's not really any lows in here. I'd say at least we're at least going to take this low out. I would like to see us probably come back into some of this range here. Probably touch it shows a weekly breaker in there. Yeah, come back in and touch this weekly breaker, at least fill in some of these imbalances. I would really like to see that happen, but there's a lot of craziness going on right now. So as we're coming up onto this one standard deviation level, I'm looking for signatures in price to show me that we're going to turn around, or that we're looking to turn around. So we look here on NQ, make a high Monday, make a new high Tuesday, make a new high Wednesday. Now let's go look at ES. We come over here, make the high Monday, just go basically make the exact same high. Tuesday, just a little lower, Tuesday. Then again Wednesday, make a lower low. So we're creating a divergence on NQ and ES. Now let's look at the Dow. So Monday made a new high, Tuesday new high, Wednesday new high, or Wednesday lower high, Thursday new high, Friday new high, and then we have the dump off. So we have divergence between all of our indices, and then obviously Friday non-farm payroll, we take a huge dump off. So like I said, I'm just expecting us to probably take this low out here, hopefully come down and take out some of these just really short-term lows. Like this is all new ground. We've never seen really price action like this before, so I don't know completely what to expect. We have stuff going on overseas. So yeah, we're just gonna have to see where we open tonight. I'm sure we'll come back and bounce some of this price action out and then move lower. We could see a huge gap up, could see a huge gap down today. We just don't know. So let's just go ahead and get into non-farm payroll price action. Go ahead and do a review on that. So actually, let's go to Discord here. So Friday, forward market opens. I said here's my high time frame charts. The video I said I wanted to see a close in the lower half of this top blue shaded area here, which is this. So on Wednesday, price was probably up here somewhere, and I said I really need to see the afternoon close in this blue shaded area. We did, if we wanted to see lower prices. And then same thing on the 4th. I said we were up here. I said I needed to see us close in the lower half, and it's exactly what happened. And then come Friday, I said I'm anticipating a juice swing to the buy side and then a run to the relative equal lows outlined in the chart. So let's take a look at that. I sent this. So I want to juice swing to the buy side, and I want to see us run down here, take these out. So I'm anticipating lower prices because of the things that I just said. So let's take a look. Come here, market opens. Juice swing to the buy side. We only wanted to encroach 1 octet into the opening range gap. I really wanted to see us take out these data highs, maybe take out these relative equal highs, and then dump lower. I would have been all over that, but I didn't end up taking a trade because of this. We didn't really take out the liquidity I wanted to, which is fine. You're not going to get in every single move. There's always more. So you just swing to the buy side and run down. Comes here in here around 10:30. This is a possible entry here. I really would have liked to see either this high taken out of NQ or this high taken out of ES. We literally didn't take any really liquidity out before making these runs lower. It was just dumping all day. So that's why I didn't get in any positions, which is totally fine. But if we take a look at the higher time frame charts, this move does make a little more sense. Coming here on the 30-minute, we close below here on the 30-minute. We open up. Just all we're doing is filling in this fair value gap, and then we dump off. So what can be learned from this price action you see? We make this run lower, right off the rip. Make some relative equal lows. We come back up in here to a premium of the opening range. So we just tap premium. As we're doing that, we also are tapping the premium here. Just tapping premium of this daily wick. Just tapping it. This is a very common signature of these wicks. Once we get into the lower half, work in the lower half, we're going to come back up just into a premium before we move lower if we're willing to do so. So these are things I'm looking for when I'm looking for lower prices. If you align yourself with the script that is running price, you're never going to be surprised by things like this. I was saying all of this beforehand. I said, this is what I want to see. This is what I want to see. If we're going to see lower prices, I need to see this. So that's all I'm looking for. I'm looking for these specific signatures that tell me price is going to do this, price is going to go there. So yeah, I honestly was not expecting a 1,700 point move on the day. I was hoping for a closure below here, and then come work down into here next couple weeks. Work down into these lows, balance some of this price action out. But I have never seen a day like this before. There's this large. Say you did get involved in this price action. This is the kind of trade that you want to hold all day. If you're expecting a big down close candle, a big down close day, like Larry Williams said, the long extended down close days and up close days they close closer to the low at the end of the day, so you have to hold all day if you want the full move. And I'm sure a lot of you guys have seen there's a few traders that had crazy days Friday, which is amazing. I'm very, very happy to see that. So yeah, that's pretty much all I got for you. This is what I'm looking for. This is what I'm looking at. Oh yeah, notice how we're using these in-logs. Come down and start exploring the upper half. Show no willingness to offer price outside of these in-logs. Just work through it. Through these quadrants and end up closing outside. It's a really beautiful price action. Just wasn't involved. It's okay. We will get plenty of opportunities next week. Yeah, that's all I got for you. I'll see you guys soon.